there was this flood in Mokwa area that destroyed farmlands. The ripple effect of that is still will be felt the month of July, June, July. So the downside risks are there, no doubt. And the one you mentioned is also of note, and that's talking about the injections that come in every month, by way of federal FAC, Federal Account Allocation Committee, disbursements. So that's also an issue, especially given the fact that much of the money that is allocated, if you look at it in terms of increase, we've had significant increase in what used to come by way of FAC, and a portion of it, okay, is usually exchange rate gains, okay, and when the money comes and is of course noticed that some of it ultimately goes to chase scarce forex, and of course puts pressure in the forex market. So the FAC allocations have remained an issue, which is why some of us have always been advocating for a way to ring fence some of those excess FAC proceeds, ring fence them to ensure that they are strictly applied to productive areas such as agriculture, such as even human capital, education, health. Okay, when you put money in these areas, of course, you are less likely to see, the inflationary impacts. But when it is used to chase forex, for example, buy forex, that puts pressure, in the forex market. I must, at this point, say that the central bank has, done so much, on its part to curtail that, to ensure that we've had this stability in the exchange rate, because that's very important. Again, leveraging the healthy reserves that we now have. I hear forex reserves now, have touched $40 billion, and if you have such reserves, that puts the central bank in a stronger position, to intervene from time to time to ensure that, the volatility in exchange rate does not cause a lot of distortion, in prices generally. So yes, the downside risks are there, and that is what I expect particularly the fiscal authority, to have an eye on, because if you look at the factors really driving inflation in Nigeria today, they're not significantly, in my view, monetary. A lot of that is non-monetary, supply side factors to do with the challenge we're having in the food belt areas, insecurity, and these other things I talked about. So high cost of production is actually what is helping to fuel inflation. So it's more of cost push than demand pull.
Prof, nice breakdown. Now, we have a meeting of the MPC expected in September, and that meeting is a much talked about meeting because people or everyone expects, even me, I expect there should be a shift. Well, I know it's not that easy, but do you think that this could, move the committee to start to think of, reneging on that stance of tightening rates? Do you think, even if it's a 25 basis points shift, do you think it could happen? Or nothing of such would happen, we'll still stay with 27.50%?
Well, except this central bank MPC wants to do a signal, signal their intention to not to continue to tighten by just having a slight reduction in MPR, maybe say 25 basis points. But if you look at the conditions, really critically, the factors, including external global factors and domestic factors, what's easily comes to me as a conclusion is that we may not see any reduction happening this year. They have MPC members have 2 more meetings to go this year, September and November. And I expect that, the rates will be held. They're likely to, maintain the status quo until 2026. I talked about global factors. The tariff war, issues are still there. We are beginning to see the U.S. Impose new tariffs, on some countries' exports. And if that continues to happen on a large scale, it's very much likely that the U.S. Fed might respond with more tightening of policy, even in the U.S., because that will ultimately, of course, lead to increased inflation rate in U.S. Because the cost of what is coming into U.S., of course, will be high. So if you have inflation rising in the U.S., for example, and the Federal Reserve is also tightening rates, I'm sure you know, again, the friction between President Trump and the Fed chair. Trump is, asking the Fed chair to drop rates. But of course, the Fed chair is being influenced by, monetary conditions in the U.S. So if the Fed, because the Fed is an independent body, if the Fed tightens because of, in response to inflation conditions, what will happen is that you're likely to see more capital flow reversals, out of developing economies, including Nigeria. I'm sure you saw the reports, released recently, that between January and June this year, we actually experienced a net capital outflow, from the capital markets. Net capital outflow, first quarter of this year, in terms of, foreign investments. So if you have increase in rates in the U.S., investors will leave our shores to take advantage of higher returns, in the U.S. So that will happen. And again, tightening financial conditions in the U.S. and will also make it a lot more difficult for us here to receive, remittances, diaspora remittances. And so if our diaspora remittances in volume, if that is affected, you can be sure that that will also affect the liquidity position we have in the forex market. So domestic global events will influence the decision of the MPC going forward. And then there is also the oil price, volatility in oil price. So far, oil price on the average is hovering around $68 per barrel. And remember, our budget for 2025 is on $75 per barrel, which was why the IMF had advised that Nigeria should see how it can she can recalibrate the budget numbers to stay within the revenue inflows. Okay, so what is happening in international crude oil markets, will affect us again via the exchange rate. If oil price drops and we have less of forex, we earn less of forex, that will also mean that the forex market will be affected. But the cheering news here is that the government of Nigeria has been able to ramp up oil production. Reading that crude oil production has now gone up to 1.8 million barrels per day, excluding condensates, really gives me joy. So if we are ramping up crude oil production, of course, that should position us to earn more, more dollars. But if oil price is dropping, that is going to have an adverse impact, on our earnings and on the forex market. So if you have pressure in the forex market, you have an exchange rate pass-through, to inflation. So that's the angle. So global events affect inflation, to that extent. And then domestically too, I've mentioned the factors, that will also influence the decision of the Monetary Policy Committee. The downside risks are there. The MPC will not be in a hurry to drop the MPR now. That's not because of the fact that inflation rate is slowing, no, but more because of the downside risk that I mentioned, the fact that you're having this, continuous disbursement pressure. and the implications that it could have on the forex market. So with that, in mind, I'm not too sure that the CBN MPC will want to drop rates. And again, bear in mind that in their Article 4 consultation report for Nigeria this year, the IMF, advised the central bank to maintain tight monetary policy. That was after even lauding the central the bank has taken in recent time in particular to stabilize the forex markets, including the forex code, the forex matching system, all the transparency measures they have put in place. So in addition, the bank was advised to maintain tight monetary policy. So I don't see the bank now lowering interest rates at this point in time, given the risks that I've mentioned. But in my view, my personal view, I would my advice to the MPC would be to see how they can maintain tight monetary policy and at the same time, improving, if you like, the policy mix. By that I mean relying less on the monetary policy rate. Okay, take for example the cash reserve ratio. The cash reserve requirements at 50%, I think is high. The bank can look into that.
All right, 30 seconds.
And also look into the corridor, the monetary policy corridor of -1 + 5. I think 5% corridor is again on the high side. So without reducing the 27.55% monetary policy rate, the central bank MPC may adjust the corridor and also reduce the CRR.
Adjusting the fundamentals surrounding the MPR. Professor Uche Waleke is president of the Capital Markets Academics of Nigeria. Thank you so very much, Prof. Interesting conversation. When the figures are out, I will definitely talk to you. I will get your views again around this. Enjoy the rest of your day, Prof.
Thank you, Tolu. Thank you.
All right, then. Well, let's do market figures. If you're